Good morning, folks. Welcome to the weekly general update for the 20th and 21st of August. And I guess we're still in the phase of this correction. We've seen the start of a retest in the last couple of days of the recent lows, and I feel that we're getting close to some sort of shorter term tradable low in the market. So I think we probably just need to wait just a few more days, and then we'll be able to get back into some activity. So let's have a bit of a look at a summary of what happened on Friday night. But before we do that, this is the important information on general advice that you've all seen before. So just a summary for the whole week. The S&P closed down 4.7% for the week, which was quite a bit. And certainly reversed about 70 or 80% of most of last week's gains. Just get rid of that. So Europe still remains the key. They're really in a great deal of trouble, and political decisions that are made in Europe will certainly have a big influence on the market. The ASX, by comparison, as I mentioned last week, has started to perform much better for the reasons that were outlined then, and that's that the Australian market has now become a lot more attractive because Americans can effectively borrow at very, very low rates, guaranteed for a couple of years, and so we actually closed only down 1.6% for the week, which was a pretty good performance. So for me, the fundamentals are in place that we should continue to see Australia do better than the overseas markets, but that may only mean fall less, doesn't necessarily mean it will go up. Gold had a stunning week and finished 6% higher, or about $100, so this really should be the final blow-off phase for gold before we see some sort of correction, and then that will be our opportunity to start to scale into gold. Now, picking the bottom of the correction is going to be quite challenging, so I don't know why that keeps coming up. So that's going to be a little bit challenging. So I think the only thing that we can do is just to gradually scale into gold rather than look to necessarily take a big trade in one hit. Silver also broke two new short-term highs on Friday night, and we'll have a look at that chart. And so it's finally making some gains relative to gold. Copper was down, but really has held up pretty well considering what's been going on. So let's just have a look at the strategy. We're in the retest phase of that recent low, which I've been saying is always going to happen because that's just how markets operate. And I've identified at this stage probably somewhere between 1085 and 1100 as the next target for the low. It may finish a little higher than that, but I just don't get the sense that it will. We saw a little bit of overrun. Sorry, just doing that one. Saw a little bit of overrun on the upside during the week. Well, I thought 1195 might stop the rally. It went just a little bit over that. Just looking at the markets, I've got a sense that it may be the same on the downside. So that's why I'm allowing about 15 points or so below the previous low, which was about what we went above it on the previous little rally. So that's my initial target area. If it breaks that, then we've got we'll have to reassess, and we've got a bigger decline on our hands. So for me, the next low should provide a very tradable buying opportunity, because I think whatever triggers the low will be significant enough to bring a lot of the money that's on the sidelines back into the market to take advantage of the valuations that are there. So ongoing in the short term, the plan really is to focus on buying some hugely undervalued large stocks. So we're looking at stocks like BHP and Rio and Monadelphous and companies of that nature. So really looking to go to the companies that I classify as blue chip, as opposed to the ones that a lot of people loosely throw around as blue chip, but certainly sticking with the biggest and the best. Because that's where the money will come back into initially. So we certainly need to be going with the stocks that are going to be in receipt of the large volumes of overseas money when the market turns. However, we won't be hanging around too long in them. We'll be looking to take profits fairly quickly, so this will be a quick in and out because I still see this market as being quite dangerous. Of course, be then subsequently on the lookout to short sell the rally because that's where we want to maintain some of our bias to the downside. And from then on, look to actively trade the ranges and start to work our way back into the small caps as well. Once I see some signs that that small cap market is starting to get a bit of liquidity back. So that's the strategy basically from now till the end of the year. Let's have a look at some of the charts. So we'll start with the S&P 500. So the S&P, this is on a monthly chart first of all. So just tighten in on there. So you can see we've bounced so far off this 1101 area. We bounced back up into this 1200. Excuse me. Bounced back up into this 1200 area, and then we've declined again. So at this stage, I'm expecting just maybe a slight new low here. If that doesn't hold, then we're looking at this 1018 area or possibly 936 if things really became unhinged in a big way. So moving on to the daily chart, you can see we rallied back up. We had a retracement level of 1195, 1198. We actually reached a high price of 1208. So just overran it by about 10 to 12 points, and then it started back down with quite a lot of momentum. So that's why I've just put a couple of marks on the chart here as a bit of a guide for me. So I'm looking at a bit of a slight overrun here initially, and if we can see evidence of a reversal at that point, then that would be a reasonable point to be starting to look at buying stocks like BHP. Let's have a look at gold and silver. So this is gold. You can see on a big picture view, gold has really taken off, and this is what tends to happen at the end of a really substantial move. You get this parabolic blow off in the market. We've been overbought on gold now for quite some time, and look, this just has to come back very soon. It could go up another $100 an ounce, but it's just too dangerous to be buying it at this level. Let's wait for the correction. The correction might only be a fairly mild one because there's certainly some extremely powerful forces that are pushing gold up. Let's move that up to the new highs. So at this stage, I'm looking at maybe 1723, but as the market goes higher, then these levels all rise with it. But we'll just have to play it day by day, and that'll be a good opportunity for us to start to build back into gold. Sorry, I'll just zoom in on that one a little more so you can see that actually more clearly. So we did close off the highs on Friday night. You can see the previous 3 or 4 days were all pretty much closing near the high point of the day, but certainly there's some selling pressure up here. Close got to 1876. Let's have a look at silver, and you can see silver had been looking a bit more promising. Poked its head above 41, which was my kind of line in the sand on silver, and then really went on with it and almost touched 43 and closed right on the highs. So if we do get a few more significant days up in gold, I think we may well see the same thing in silver. I was looking at somewhere around 45 or possibly $50, but again, it's pretty difficult trading silver at this level. I guess if you're a more aggressive trader, you could maybe trade this breakout, but I would do it with a fairly small position, and I'd keep a pretty tight trailing exit on that. So I'll leave that up to you. It's unfortunate that it burst above 41 and just kept going on Friday night. So that's silver. Let's have a look at copper. This is copper on a weekly chart. You can see we're still just holding the $4 area, so really, whilst a lot of things went down last week, certainly copper wasn't one of them, so that's a bit more of an encouraging sign. And let's have a look at our indices now. So first of all, this is the ASX 200 on a monthly chart. You can see we've broken the lows of July last year, and we've got down to basically the 61.8% level of this whole move. So hopefully that level of 38.20 will be the bottom for now, and you know, we'll get a tradable low from here, but we'll just have to wait and see. But certainly that's possible because we are starting to really outperform the US market at this stage. Let's have a look on a daily. So you can see Friday was a very ugly day, and we'll just have to wait and see how the market pans out. But I would think that there's a pretty reasonable chance we'll get down close to the lows of the week before last. Now you'll notice that in the bounce, if we take a retracement level from the start of this correction, which was the correction really started on the 8th of July, we put our retracement framework on that, and you find that 4316 was the top retracement level, and we've in fact got to 4324, so almost bang on. So the fact that this is now turning back over is pretty much what we'd expect. I'll have a look at the individual sectors. So this is the banking index, and you can see really took a hit on Friday, closed absolutely on its lows, so it was a very negative finish. So traders in Asia knew what was coming in the US on Friday night, so we'd anticipated what was happening in the US to a fair degree. Let's have a look at energy. You can see energy, same thing, really rolled over. We had oil down on Friday night, and it also closed on its lows. And you'll see the materials index did the same. So really, this was across the board on Friday, all sectors. It was really just a semi-panic exit out of the market. And on that score, I'm really seeing sort of not only price action, but I'm seeing, you know, the agreement in the media that things are really bad. There's a lot of things coming into place now that we're pretty close to the lows. So if you're looking for some good signs, then that's where they're at. And finally, this is the XSO. And despite the fact that it's obviously going in the same direction as the general market as you'd expect, I'm really quite surprised that it's not doing far worse than it is. This really is holding up extremely well, considering. So I think once we get to a bottom in the market and things start to turn up, I really think we're going to see some good gains quickly in the small stocks, because they just haven't been battered around as you would normally expect. Okay, so that's it for the general overview of the market, where we've basically got nothing open, which is the place that we want to be. We're looking to trade this bottom in the market. We're also looking to trade gold and silver. I think the two of those are going to go in opposite directions for a while. While stocks are going down, gold and silver are going up, and when we get a rally in stocks, then that will be a time to short sell the stocks, and that's probably going to be fairly close to a time to be buying gold and silver. So I think that's how it's kind of looking like it's panning out at the moment. So we've just got to wait a few more days until we see what the market does. There won't be any individual chart video for stocks, because we don't have any positions open at this stage. I've got a very large list of stocks that I want to buy. I've got a broad idea of where I want to buy them, but basically what I'm looking for is the big panic sell-off that would indicate that you know the general masses of traders have basically thrown in the towel, and that'll be our entry signal at that point. So that's it for this week. We'll talk again next week. Cheers.